Welcome back. We are now hearing that Jpmorgan is directly taking on Bitcoin and crypto ecosystem at large with their launch of their own blockchain. Now, if you guys have been following the crypto space and Jpmorgan, they have been the biggest crypto bears in the world, telling everybody that, it's going to zero, it's manipulated, it's not real currency. Meanwhile, behind the scenes, they have been essentially creating and researching their own blockchain technologies to conquer the world as they're conquering the banking ecosystem. And so we're going to be talking about that today. We're also going to be talking about kind of the macro picture of where the Bitcoin market is, why this is important to understand what Jpmorgan is doing here. And we're also going to take a little bit of a deeper dive into some of the other areas of potential investment in this cycle, including the Bitcoin mining companies, as now crypto, Bitcoin mining, and the US are becoming synonymous. Let's get right into today's topics. And don't forget to give this video a free thumbs up. Hit the subscribe button. We upload almost every single day to bring you the latest happening in the financial world. Thanks to all the subscribers. If you want to help support the channel, click the join button down below to learn more about becoming a channel member. Let's get right into today's topics. So we're going to start right here. Jpmorgan settles their first tokenized treasury trade on public blockchain with Chainlink and Ondo. Now, if you guys have been following, right, what have we been seeing happening with Chainlink, with Ondo Finance? These are becoming really the connectors of decentralized finance and traditional finance. We saw Chainlink and their founder speaking at the Crypto Roundtable just a few months ago. We know that Ondo Finance is invested in by World Liberty Finance, which is the Trump family crypto portfolio company, I guess you could call it. And now Jpmorgan is entering the mix, and people are going to, cheer this on and all of this. But remember where Jpmorgan was, and while they were fudding over the last, decade, all this crypto and Bitcoin stuff, they were literally working with Consensus, which basically runs Ethereum's development, or at least the majority of it. And they were basically the funders of Consensus. And then Jpmorgan created their own blockchain called Onyx and JPM Coin. And then they effectively, I think they sold it or gifted it to Consensus just a few years back, while continuing to fund the whole crypto ecosystem. But as I've theorized on this channel, this was all just to slow crypto down so that the banks could catch up, because the banks wanted to control it, because they want to control the financial ecosystem. And what they started to see was that the crypto ecosystem was outpacing the banks, including something like Circle, right? Circle has basically gone above and beyond, and probably is worth, from a valuation standpoint, probably actually more than what Jpmorgan is worth. Now, keep in mind, Jpmorgan makes a lot of money, right? They make $40 billion every single quarter, something like that. Maybe it's a year. I think it's per quarter, but maybe it's per year. But either way, these are massive, massive numbers in profit. But a lot of this is just from debt, right? Issuing debt, 30% credit card interest rates. Oh, you don't have the money in your bank account and you tried to take out your money? We're going to charge you a $50 overdraft fee, even though you don't have any money in your account, right? And this goes on and on and on. It keeps getting bigger and bigger until people start to move into the decentralized finance space. Because in DeFi, in crypto, in blockchain, right, there's other areas that you can actually make yield on your money, hence USDC's valuation. Because USDC is effectively doing the same thing that the banks are doing. You give them dollars, they convert it into USDC, and then they're holding some dollars, but they're also holding dollar-denominated assets that pay yield, like treasury bonds and stuff like that. And so that's how they're making money, and then able to provide some of that as interest to you as a holder of the coin. This is what the banks used to do. They just don't do it anymore. And so now the bank's kind of trying to get involved in crypto and blockchain. I mean, what do you think they're going to do? They're going to start charging you up the wazoo, right? Watch what they're doing. Anyway, let's understand what is going on here. So Jpmorgan has completed a blockchain transaction outside of their private system for the first time. The deal involved tokenized U.S. treasuries and was settled using public blockchain infrastructure, according to Fortune. The move marks a change in the bank's approach to digital assets, which long focused on private networks. Again, they created private networks so they can control everything. Then they saw Base creating a public network that Coinbase still has, immense control over, and I guess they're making money off of it somehow, probably from fees and stuff like that. And then the banks are like, wait, we can do a public blockchain also, and we can try to conquer the world. But I don't know how many people are really going to trust this. But keep in mind, a lot of this is going to be done on the back end, right? The banks can say, oh yeah, we're doing everything the same way, but they're really doing it on blockchain versus their proprietary internal software. And so the transaction occurred in May 2025. It was conducted by Connexix, whatever. This is JP Morgan's blockchain division. And you can actually go to their website. It says the next generation financial infrastructure. And so they're telling us they're taking on crypto, they're taking on Bitcoin, they're taking on DeFi, they're taking on all of the platforms for tokenization and real world assets like Hedera, like Ethereum, like Polygon, and even Cardano in the mix here, right? So JP Morgan has taken on all the entire blockchain ecosystem. It says tokenized investments, faster cross-border payments. Whoa, they're taking on XRP as well. Introducing Connexus, blockchain infrastructure by JP Morgan that reimagines the transfer of money, assets, and financial information. But wait, I thought that blockchain and crypto were scams. Anyway, moving right along, Chainlink posted this on X to explain a little bit more about what in the JP Morgan is going on here. They said, we're excited to announce the successful completion of a cross-chain delivery versus payment transaction in collaboration with Connexus by JP Morgan and Ondo Finance. The milestone marks the first of its kind cross-chain atomic settlement of tokenized assets between Connexus Digital Payments Permission Blockchain Network and a Layer 1 blockchain network. Which Layer 1? Chainlink? Powered end-to-end by Chainlink runtime environment, the transaction involved the exchange of Ondo Chain's short-term U.S. government treasury funds as the asset leg, with Connexus Digital Payment Network serving as the payment leg. Oh, got it. They use Ondo as the layer 1. Since inception, the Connexus platform has exceeded $1.5 trillion in notional value, processing an average of more than $2 billion daily in transaction volume. Payment transactions have grown by 10x year over year. But were all of these transactions, like what they're talking about here is $1.5 trillion in notional value, processing $2 billion a day. That they're talking about Connexus blockchain. This is an internal blockchain. It's not a public blockchain. It's not an open source blockchain. It's a blockchain controlled and owned by JP Morgan. So by saying, by Chainlink celebrating them with fake numbers, in my view, because $2 billion a day in transaction volume, show us the data, show us the on-chain metrics. We can't. We just have to trust that what JP Morgan is saying is valid and accurate, right? And the other thing is $2 billion. Well, when you're the largest bank in the world and you're giving basically 0.01% interest to everybody who puts money in the JP Morgan bank, well, yeah, they're just using your money to transfer it to show that the blockchain is working, that their own internal blockchain is working. In my view, this is not really fundamentally amazing, but it seems like the crypto ecosystem and the traditional finance ecosystem are in awe by this. I don't get it. Maybe I'm missing something, and this is why I'm making the video also, so that you guys can let me know, like, what am I missing? What is so revolutionary about a bank using a blockchain with Chainlink? That's like celebrating Ethereum. Like, wow, Ethereum just did a Chainlink transaction 2 minutes ago. Congratulations. Like, who cares? Who gives, right? How is this going to make our lives better? How is this going to improve my my customer experience with JP Morgan? It's not, right? It's not. Anyway, Chainlink continued saying Chainlink CRE, a secure offline computing environment for coordinating activity across blockchains and existing systems, enabled Connexus digital payments to seamlessly be connected at the application layer with Ondo Chain for the atomic DVP transaction. And again, DVP is delivery versus payment, whatever that means. And so this is how it kind of works. Institutional investors initiate a transaction on Ondo, it moves to Chainlink, and then it moves to Connexus. So why do we need Connexus in the first place? Because it's a traditional bank, I guess. Okay, but you can also do this with USDC. Like, let's be very clear here. If you're in USDC, this is Circle is connected to the Federal Reserve. Like they're involved in repo, reverse repo, and other type of operations like that. So they have direct connection into the liquidity. So why would anybody need to do this? Like I thought it would be the other way around, where institutional investors put their money into Connexus or whatever this is called, and then move it into on chain. But they're talking about reversing, right? Putting your money on chain and then pulling it off chain into a private network. Why would anybody do this? And so maybe this is for like internal banking transfers on a global level. I get it. But like, why do we care about this? This was like groundbreaking breaking news. Jpmorgan settles their first transaction on chain. It's like, who cares? I'm sure they did this years ago, by the way. It's not like this is their first one, maybe their first public transaction, but I don't get it. I don't get it. So if I'm missing something, let me know. But if you guys don't get it, let me know in the comments. Cryptoviser, what the F is the big deal? Anyway, there's a lot of other bullish things going on though, and this is kind of where we're going to really talk about the growing. Because really, what I take from this J.P. Morgan story is that J.P. Morgan, right, as much as they said crypto and blockchain is BS, even saying, well, we could have our own private blockchain and that's fine, but everything else is BS. And now they're connecting into public infrastructure blockchains. It's very clear where this whole market and where this whole ecosystem of development is going. It's very, very clear. And so where is it going? Well, Coinbase CEO says that crypto is here to stay and it's going to be part of everyone's 401k. And that is true. A lot of people are not realizing now that Coinbase is going to be included in the S&P 500, which is one of the major stock market indices. This means that any investment or firm that's buying into investments like mutual funds or ETFs or whatever, they're investing in the S&P 500. That means that they're going to be investing in what is in the S&P 500, meaning that there's going to be continual and fairly constant Coinbase purchases as people are buying in their 401ks, and then those are going and buying into mutual funds, and then those mutual funds are buying into the S&P 500, which then goes and buys into Coinbase. As you see, it's many layers, but this is how most people invest. Like most people, if you ask them, what's in your 401k? They have absolutely no idea. And this concept of understanding what you're investing in and understanding how you're taking charge of your financial future and retirement, right, and protecting that, I think is very, very critical. The banks don't want you to know this information. They want you to think that it's totally normal for you to be charged 30 or 40% interest. And meanwhile, when you put money in their bank, they're not giving you anything. In fact, they're charging you when you don't have the money in the bank. And, just effectively just squeezing as much as they can out of you to just transfer the wealth straight up to the billionaires. I mean, that's effectively what it is. And this is where crypto is different. Crypto allows you to be part of the wealth transfer. Now, whether you do that or not, that's up to you. Whether you're investing and protecting your own future, that's up to you, right? It's nobody else's fault if you're not investing, especially if you know it, right? I know a lot of people that you talk to them about investing and they're very interested in protecting their financial future, but then they do nothing to actually to execute on that thesis and that plan. And I mean, we're talking about decades, people just not even paying attention at all to their financial, portfolio, which is unbelievable. It really is. But a lot of it comes down to education. And this is one of the reasons that I love the crypto ecosystem, because people have to learn about it to really understand whether they should put their money into it. And so as they're learning about it, they learn why crypto is one of the in my view, the best investment opportunities probably that's going to come in our lifetime. Maybe AI as well, but I think crypto is going to last a little bit longer from an investment perspective than AI. Let's listen to what Brian Armstrong says here, the CEO of Coinbase. And don't forget to give this video a free thumbs up and also hit that subscribe button. That way you never miss a new video. Let's listen in.
It's big news for you guys on the S&P 500. Is that going to change your outlook at all, or the impact that Coinbase has?
Well, we're very happy to be included in the S&P 500. It now means that crypto is here to stay. It's going to be a part of everybody's 401k. It's a testament to the hard work of our employees and our investors. And it's a big appreciation to our customers, too, that helped us get to be one of the most trusted companies in America. And so we couldn't be happier.
And, this is interesting because this is J.P. Morgan is posting this stuff all around the same time. Because think about what I think Eric Trump said the other day, where he said, one of the Trump sons basically said, to the banks, if they don't get with it and change immediately, they're going to be extinct within 10 years, and specifically basically saying that DeFi is going to take over. And so now Coinbase, crypto, is in the S&P 500. What else is going on? We have Dave Ramsey's show, which is traditionally not Bitcoin, right? More safer, kind of longer term investments. And a lot of people who call into the Dave Ramsey show are not very financially educated or got themselves into serious financial issues with a lot of debt and stuff like that. And so crypto should be the last thing. I mean, I remember watching videos in the last year where somebody called in and said, we're late on our payments and our mortgage is late, but we have like, I don't remember, $10,000, $20,000 in crypto and Bitcoin. And should we sell it? And Dave Ramsey's like, yeah, sell it. And they're like, yeah, but by the end of the year, where the market is supposed to be going, we could wait a little bit and then sell. And he's like, no, sell now. And they're like, yeah, but where the market's supposed to be going. And I'm watching this as somebody who analyzes this market every day and talks about this market. And I'm like yelling at the screen, like, no, sell the coins. Because if you need the money and you're like, well, what everybody's saying is, at this point, within 3 months, we're going to go higher. No, you're basing your financial future on maybes, right? This market and really investing is money that you can afford to lose, or that the risk outweighs the reward outweighs the risk, right? If you're investing for your future, you can, and you're not going to retire for like multiple decades. You can take more risk now. You can get a little bit deeper in versus somebody who is maybe 5 years from retirement. They have to be much more cautious. They can't take those risks because they don't have decades to correct the risk if Bitcoin doesn't play out or whatever other investments that they're looking at. And so everything is changing now, and it's very clear. So the banks have to change. People's investment thesis have to change. Financial advisors or people who help people with their finances, they have to look and stop saying don't put your money in Bitcoin, because at the end of the day, Bitcoin is going to outpace pretty much everything else and potentially even outpace the debt interest that you owe over the course of time. But anyway, let's listen to what they say. This is the Dave Ramsey show.
I would say Bitcoin is here. I'm not saying Bitcoin can't fall. I'm not saying I disagree with anything you said. In fact, I agree with everything. I would say to somebody, if you want to invest in Bitcoin, I would treat it just like we tell people to go sit down with a SmartVestor Pro and learn about the strategies so that you understand what you're doing. But I agree with you that it should be a part of a diversified strategy, not all eggs in that basket. I agree with that.
Now, here's the deal. What we've talked about on this channel is, all roads lead to Bitcoin. So yes, I would definitely agree with what he's saying here, right? Take a very small percentage, 1%, 2% of your portfolio and put it into Bitcoin, maybe not all at once, but over the course of, a few months or whatever, and just wait and see. Because really getting off of zero is number one, because once somebody is invested in something, they're more likely to start learning about it. And the more you learn about it, the more you want to put more money into it. And the more you put more money into it, the more you want to learn about it. Then you want to learn how the markets are working and cycling and operating. But it is important to understand how the cycles work, because we are in the midst of the bull run. When I'm recording this in the middle of 2025, we are seeing everything lining up exactly as needed for the final phase of the bull run to complete. And I believe we are in the final phase of this bull run, the 12 to 18 months after the Bitcoin halving. Bitcoin halving was a little bit over a year before in 2024. And now we're in 2025, 12 to 18 months after the Bitcoin halving. This historically is when we see the most massive gains. And so we have Jpmorgan getting on board with Chainlink and Ondo, the Trump organization investing in Ondo and Chainlink, right? Blockchain from the bank that's doing public settlements. Coinbase is being part of the S&P 500. Financial advisor shows, and they're changing their tune on what crypto is. What is next? The banks. Once the actual banks advisors can tell their clients you should put 1% into Bitcoin, what do you think is going to happen, right? Just think about Fidelity. They have $4 trillion in assets under management. They do allow crypto trading right now, but they don't advise it. And it's like a separate department, from my understanding, like in the company. So once they're able to say you should look into crypto, what do you think is going to happen? The money's going to start flooding in. Plus, Coinbase flooding in. Maybe Coinbase is going to start selling some shares in the open market to then go buy Bitcoin, similar to what we're seeing happening with many other companies, including 21. Now, we've talked about Jack Mallers' new 21 company, which is backed by Cantor Fitzgerald and Tether as well. They have now bought 4,812 Bitcoin for $458 million through Tether. Now, we know where their valuation is going to be around $3.5 to $4 billion. That's how much Bitcoin they're going to be starting off with, and they're going to be doing what MicroStrategy is doing. Whether this is going to work out or not, I don't know. I personally look at it as like, I'm very, very close at this point in the cycle, in this 12 to 18 months, to start positioning downside, at least to hedge the risk of being long and looking at the upside. And I don't know that I'm fully there yet, but I'm starting to become open to the short of the market over the medium term. Short term, I think we're going to go much, much higher because of all of these other factors. And that brings us to some other areas of crypto besides Bitcoin, because we talk about Bitcoin and crypto all the time on this channel. The market is going to do what the market's going to do, but we also want to look for gems in the crypto market, but also crypto proxies like Coinbase, like MicroStrategy, like 21, but also like the Bitcoin mining companies. And kind of going back to what we were talking about before with the Trump sons being very pro crypto, Griffin Digital Mining has now announced a merger with American Bitcoin. Now, we talked about Griffin Mining since last year in 2024. Since then, we've seen a massive decline in the price. And granted, you also have to remember the company was acquired by this Bitcoin crew that was really going to amplify Griffin Mining. And listen, it's been a very weird year in Bitcoin mining, generally speaking, right? But again, we are at the end stages of the bull market. And this is when we start to see consolidation. We start to see companies flexing their monetary muscles by buying companies and buying Bitcoin and doing all these things. And we know Griffin Mining told us, like their CEO told us last year in 2024, that they wanted to either acquire other companies or be acquired. Ultimately, probably acquire other companies. But now they're merging and they're effectively going to be acquired by American Bitcoin, which is the Trump family Bitcoin business. This is the business that they got with, I think it was Hut 8 Mining, to create American Bitcoin with NASDAQ ticker ABTC. Well, now there is an announcement that basically Griffin Mining entered into a definitive merger agreement with American Bitcoin Corp, Bitcoin accumulation platform focused on Americans' Bitcoin infrastructure backbone. Upon closing this deal, the combined company will operate under American Bitcoin brand, led by the management and board of American Bitcoin. They're calling this a merger. It's more like an acquisition. That's literally what it is. Because really, Griffin Mining isn't getting anything from this, right? And a few weeks ago, I basically closed my position in Griffin Mining. Maybe that was a poor decision because we went up 10x. We literally went from 14 cents all the way up to $1.40. So I could have been buying at 14 cents and selling up there. I don't remember what price I actually sold that, but I know it was lower than 142, right? But I knew when I saw this pump based on this acquisition or merger that I needed to look at the actual numbers. And the numbers are worse than I thought. Basically, following the completion of this transaction, current Griffin stockholders are expected to own 2% of the new company, and American Bitcoin stockholders, the Trump family, will own approximately 98%. This transaction is expected to close in Q3, which we're basically towards the end of Q2, so we're almost in Q3 in 2025. I don't even know what American ABTC is going to be worth or what it's worth. Let's see if I don't think it's going to be on here already. Oh, it is. No, it's not even on the market yet. So this is potentially for American Bitcoin to have a ticker name, and then they're just going to change it into, I don't know. I really don't understand the reason behind it, behind them buying for just 2%, right? 2% is like nothing. This is the same thing that's happening with CEP, Cantor Equity Partners, and the Jack Mallers company, right? Jack Mallers company is going to be merging with CEP through a SPAC. This is the SPAC. And basically, this ticker name's shareholders are only getting 2% of the new company. So 2% of the new company is going to be valued at about three and a half to $4 billion. 1% of that is about 35 million. So 2% of that is 70 million. So a little bit more than that is like, it's about $90 million, and the current market cap is 400 million. So really the valuation of this company when it merges should be about $10, but people have bid it up to $30 because they're like, oh, it's going to be the Bitcoin company. It's like, yeah, but you're only getting 2% of the company. And the same thing is happening here with Griffin Mining. It's a little bit of a disappointment, but as we talk about on this channel, it's not a disappointment, the price movements. I'm more disappointed that Griffin sold or merged just for 2%. But again, I'm not a shareholder anymore, so I don't really care. But it is a little bit of a disappointment. I mean, I closed my position in this because I was very disappointed in the path that they were moving. I don't think that they were moving fast enough, and I don't think that they were being as communicative as they were at the beginning. And so, being in the end stages of the bull market, it's either you're going to get a 10x or you're going to go to zero and go bankrupt. And I just think that the risk is not really worth the reward. And that brings us to Bitfarms, right? Is Bitfarms risk worth the reward? Now, we've been talking about Bitfarms as well in the Bitcoin mining space, more specifically because more recently they purchased Stronghold Digital Mining, which is another mining company, for, I don't know, a few $100 million in stock. And basically, they brought their hash rate up to 20 exahashes per second. Current exahashes per second is 19 and a half, which is up 200%, 3x effectively, from March of 2024. And so there's still people who are saying, oh, but Cryptoviser, Bitfarms isn't performing. Bitfarms isn't increasing their capacity. It's like, they are. The numbers are right here. These numbers are their first quarter results, just came out. In 3 months, they made $67 million, which was up 33% year over year. Gross mining margin is down. I would imagine a lot of this is because of what they're doing, because they're also focusing on high-powered compute, pushing all of their business into the United States, which I think is a smart idea for them. At a glance, you can see all these numbers, but I'm not really thinking about what is happening now. I'm really looking at Bitfarms compared to the other Bitcoin mining companies, because the other Bitcoin mining companies with similar hash rate have much higher valuations in the billions and billions of dollars. And there's actually some Bitcoin mining companies. I forgot which one it is. Maybe Core Scientific with a similar hash rate. I don't remember exactly which one, but a similar hash rate to Bitfarms. And they have more than double the valuation from a market cap perspective. And so I do think that Bitfarms is still undervalued, but there is obviously still risk. One of those risks was in their Q1 results, and they put it at the bottom, about their Argentina operations. Now remember, they are really focusing on the US more. We saw that with Stronghold acquisition. And that is a smart thing because, again, the president's family is involved. The president said he wants all Bitcoin to be mined in the U.S. So I do think there is a lot of focus going to be put on this, and we're seeing a lot of large like investment funds and firms buying into MicroStrategy, buying into the Bitcoin mining companies. And I think once Bitfarms moves from Canada to the U.S., which I think is going to happen eventually, it's going to be really, really big for Bitfarms. But they're in the process of doing this. So on April 30th, the company Bitfarms was informed that its electricity supplier in Argentina was going to conduct a process, On May 12th, Bitfarms was informed by them that effective immediately, they were halting the supply of electricity to Bitfarms' Argentina facility until further notice. At this stage, there is uncertainty around the potential resumption of the supply of electricity and timing thereof. And so their Argentina operations are shut down for now. And according to Matt Siegel, who is head of digital research at Van Eck, he said that this is around 13% of Bitfarms' mining capacity. So this could be a big issue, or this could just be a little hurdle in the road. Because in my view, what Bitfarms needs to do is get the hell out of Argentina, right? They just did that when they bought Stronghold and they sold, I think their Paraguay facility, which showed that they're really focusing on the U.S. What I think they should do, I think the CEO Ben should be get on a plane, go to Argentina tomorrow, and close down the facility, pack everything up, every fucking mining machine up, and bring it into the United States and put it online within 2 weeks. This is possible. There's no reason they can do this or shouldn't do this. This is a great opportunity. Argentina doesn't want to supply the power. Buy. Pick up the stuff and leave. I can't see how that would not be worth it in a bull market to pick everything up, move it to another facility, and get it up online within 2-3 weeks. If you have people working around the clock, it can be done, right? And whether they're going to do this or not, I don't know. I hope that they do, and I think that they should, but I don't know if they're going to. Because they can just sit in this where 13% of their capacity is offline for multiple months in the bull market, and they're not producing any Bitcoin in the bull market. And then we get to next year and they're like, all right, they're turning on our electricity again. And then they just missed out on 7 months, and now all their machines are older. They were not productive over however long they didn't have electricity. So yes, I think that Bitfarms should not even be worrying about outside of the United States, and any opportunity that Bitfarms has to bring operations back into the United States or even Canada, they should be doing it. And they have the facilities. They have the facilities to expand their operations, and clearly they have the mining equipment. They just have to move it from Argentina into the United States, and they can do this very quickly if Ben wants to do it. But again, it's Wall Street, so likely they're just going to take losses, and so this is a risk. I'm a little bit upset that there's no guidance on what they are going to do. They're just kind of like, well, right now our operation's shut down. It's like, okay, we'll figure it out. Tell the electricity company, you either give us electricity within 3 days, or we're moving all our shit out and we're not going to ever use your electricity again. Like, what is so difficult about that? That's my view on it, right? And at the end of the day, Bitfarms is the customer because they're buying the power. And so if the power company doesn't want to give them power now and doesn't want to give them any guidance when they're going to get the power, buy. We're never going to buy your power again. We'll keep the facility empty and we'll just never buy your power again. F you. But I don't think they'll do that. But anyway, and that leads us to kind of the end of the video, or towards the end of the video, where we're going to talk really about Bitcoin maybe heading to a double top, right? We are now re-hitting all-time record highs. And right now, at over $100,000, we have people who are saying basically the bull run hasn't even started. And I'm like, where have you been for the last year? We already basically had a double top from the end of December into January. And I believe this is the first pump or major pump in the markets. And if we look at what happened in the previous cycle in 2021, the pump lasted into March or February. It lasted longer than it did this cycle, right? In the end of January. It lasted into February or March. And I think that that's where people are getting messed up, because they're thinking that this pump is the February and March pump. And I think that the Trump pump was the February and March pump from 2021, which means that this pump now is the final pump of the cycle. And I don't think a lot of people are looking at the risk. I'm looking at all of these things coming out at the top of the market. I'm like, why did Jpmorgan not do this last year, right? Why did Chainlink not do this last year? Now, maybe it was because of regulatory stuff. I get it. But everything else is lining up. Coinbase, the advisors, more companies following the MicroStrategy thesis, presidential family buying Bitcoin mining facilities. This is all happening right now. And so there could be a lot of liquidity coming back into the system over the next 6 months. But I remind you, that is the time to take profits. Because if you wait until this extended cycle that everybody's all excited about, you may miss. Forget about the top. just profits in general. And that's what we're here in the markets looking for. We're looking to take profits. We're looking to make money to protect our financial futures. And again, there is no other asset in history that has made the gains that Bitcoin has. Now, I do believe that we're going to have diminishing returns as time goes on. We're not going to see those 1,000% increases forever. But that doesn't mean there's not opportunity. Maybe the opportunity is not in Bitcoin. Maybe the opportunity is in companies like Griffin Mining, where you can see that 10x and then take your profits, and then boom, you just made, effectively, 10 years of profits in a very safe investment portfolio. You made that in one trade. But will you take profits, or will you say, no, we're going higher? And because remember, when you're saying let's go higher, there's people betting against that. And when you're saying let's go lower, there's people betting against that as well. You just have to understand the flows to understand which is stronger. Is the shorting stronger or the longing is stronger? If people are buying in, and we don't see a lot of selling because people don't believe it's the top. They don't see those signals that it's the top. And I'm not talking about just regular everyday people. I'm talking about like big money, right? The big traders. They don't care about where the coin's going to be in a year. They care about where the coin's going to be tomorrow and the next day and the next day after that. And if it goes high and it does a 10x, they are taking profits, right? Maybe not 100%, but maybe 100%. And people don't understand this concept. And this, to me, says that, yes, we are close to the top of the market. I think I'm the only YouTuber talking about this right now. Everybody else is talking about the fact that we're going to have an extended cycle. And we may. Here's the deal, right? Just because let's just say this is the top of the market, that doesn't mean we're not going to have a lot of volatility for the next year, right? We can go down 50% and then come back and almost touch 100,000 and then go straight back down. That's possible as well. And those pumps and those jumps in the market that's the opportunity to make some money. But I think generally speaking, the further we go, the closer we are to the bear market. The further we go, the closer we are to transitioning into the bear market. Nobody's going to know when that transition has taken place until much after, just like we don't know about a double top until much after. We don't know where the top of the market is until much after. We don't know where the bottom of the market is until much after. And so we have to analyze all of the metrics in the market, all of the sentiment in the market, and look for these top signals that can indicate, hey, we may be close or near the top. I think that we are. I mean, we are closer to the top. Let's say the top is 100. Let's say the top is 150,000, right? Let's just say we are closer to 150,000 than we are to the low of the cycle, which was 15,000 when FTX collapsed. We're closer to the top than we are to the bottom. And to me, I mean, if you're saying $400,000, I'm seeing a lot of predictions, $400,000 Bitcoin. And I'm saying based on what? Like, what are we basing this $400,000 Bitcoin on? A 4x, which would put Bitcoin at a $8 trillion valuation. I think with time we'll get there. But what catalysts are going to push us there? The only thing that I could think of is a supply-demand imbalance. But I think there's going to be a lot of smart money and a lot of big money, like the ETFs, that will sell long before 400,000. So while you're waiting for 444,000, they're selling at 200,000, 150,000, 175,000. And there's a lot of people who will say, but Cryptoviser, you're going to miss out if it goes to 400,000. Yeah, but I will 100% miss out if I let it go below 100,000. And there's a lot of people who say it'll never go to under $50,000 again. Maybe it won't, maybe it will. I don't want to be on the buying now and then we go down to that level, because it will take a lot to recover. Anyway, these are just some thoughts on the market, thoughts on Jpmorgan and the banks getting involved and everything else going on in crypto. Let me know what you guys think. Don't forget to give the video a thumbs up, hit that subscribe button. Check out my other videos. We upload almost every single day on this channel. I'll see you when I see you. Invest responsibly and crypto on.